Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody, guys. Let's take a look again on the gold market. So it was yesterday a really dramatic performance across the board, mostly on the Forex market. It's a lot of unexpected things have happened. So as you know, well, the Bank of England action was more or less expected. So now they stand forward and ahead of the other central banks, developed central bank at least, in terms of the rate change. So 2 steps ahead of the Fed and ahead of the European Central Bank as well. But the major noise actually and scream has come from the European Central Bank. So it said that, well, they do not see yet anymore. They do not see anymore that inflation will be temporal, and that it should start decreasing later in the year. In the first moment. Second, so Christine Lagarde has eliminated the phrase from the statement that rate change is highly unlikely in this year. So they turned back to the idea that maybe rates still could be changed within this year. So that was absolutely unexpected statement and has led to a big rally on euro currency. That in turn has led to volatility on the United States dollar, because it definitely has happened some rebalancing on its value, because it was suggested that Fed is totally ahead of the European Central Bank with the coming and expected 4 rate changes this year, but recent change from the European Central Bank and rate change from the Bank of England, the equilibrium, the previous balance starts to change, because especially on the dollar index, because as you know, the dollar index is trading to the basket of the different currencies, which is the major part is the euro currency and the British pound. Since both of them has increased its value, that has made impact on the dollar. So if we take a look at the dollar index, you could see what has happened. This is, guys, by the way, weekly chart. So it's by technical picture, this type of action suggests that this action should be continued later to the downside. Maybe this doesn't mean necessarily that will be a major strict reversal and going straight forward, but some extended downward action, some deeper retracement on the dollar index definitely should happen, especially if European Central Bank keeps its rhetoric and provides more details in the next sessions. So, but for a gold market, as you can see on the gold, it was a lot of volatility, but that was not the achievement of the gold. All this has happened because of the changing of the value of the dollar. So actually, the recent jump in the gold price has happened because of the dollar performance. Yesterday, actually, we have discussed initially the drop that should happen because we've got the bearish bread and butter trade, and that trade perfectly has been completed before the pullback has happened. Because again, if you take a look at other markets, for example, on the interest rates, you could see that interest rates are rising, and that actually has made impact on the performance of the gold in the beginning of the session. And that has led the market to complete the bread and butter trade. But the recent pullback that we saw on intraday charts was triggered particularly by the dollar value. So at the same time, if you take a look at the higher time frame picture, for example, on the daily, we do not see something really very bullish. So overall choppy and gradual price action that reminds mostly the flag consolidation after the big drop. This drop, actually, as we discussed in the weekly report, this is bearish reversal week, which is very significant, and supposedly it should get some continuation. So today we also will get the non-farm payrolls release, and again, if wage inflation appears to be very high or above the expectations, that could bring some suggestion and rumors that Fed could change rate simultaneously for the 2 steps, for 0.5% on the March. That could again return back to idea of the dollar value, and this recent performance of the dollar index might be, well, slightly changed, so dollar could turn some pullback, especially because technically as euro currency stands at overbought currently, as the dollar index stands strongly oversold on the lower time frames, and inflation, and retracement actually should happen. And that keep us aside from the, well, some suggestion of really big bullish performance on the gold market by far. This is first moment. On the lower time frame, that's the performance that you can see. Here's the total completion of the bread and butter trade, or let's call it a lookalike bread and butter, because we said that's not actually strictly bread and butter, it's some kind of the just momentum trade. But it has been perfectly completed with this 618 pullback down. That's already the reaction of the European Central Bank statement. And now major question, what to expect, whether we should be focused on this a bit deeper ABCD pattern, because we have strong bullish engulfing here, or we need to be ready for a further downward action here. I think that for taking the short position, we need to wait. First of all, because bread and butter just has been completed and market fast returned back, which is currently suggests not good point for taking the new short position. Second, just because we are coming to non-farm payrolls release, and results might get strong impact on the gold market as well. And finally, today is Friday, so I do not see as a good idea trying to take the new position before the weekend. For taking the short position, it also will be interesting to see what will happen with this engulfing pattern. Previously for the bears, that it should be erased with the downward action. That, in this case, we could return back to the idea of this possible A, B, C type pattern for the downward continuation. At the same time, if you trade on the intraday charts, you're a scalp trader, you could try to use this engulfing pattern. In fact, actually, for the bulls, this is the only pattern that you could put in the background as a foundation for the possible trade. That's actually suggests that you could consider for some pullback and watch for what will happen around the 18 even 1796 areas. So because if this pattern works, market should stop somewhere in this level or that level and show some upward continuation. If both levels will be broken, it means that it's really big chances that this pattern will be erased and market keep going lower with the larger ABC reaction that we have on the daily chart. That's why if you would like to participate in trying to ride on this bullish engulfing pattern, just trying to catch the position around retracement, that also lets you to minimize your risk. So just difference between the invalidation point, which will be obviously below these lows, and some fib level, well, this will be not very significant risk, and you will get the chance to participate. Currently, as you can see, market stays at the COP extension of this ABCD pattern, 618 extension, and maybe some pullback could happen. So that being said, for the bulls, the only background that you have stands on the intraday charts, and this is engulfing pattern on the follow time frame chart and the hourly charts, very short term context. That's actually the pattern that you only could use in current trading process. For the bears, we suggest that's better to wait a bit and see what will happen, because overall situation stands bearish, but recent reaction and significant drop of the dollar index provides short-term bullish sentiment, which it's not very good for taking the position right now.